Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of all the corporate jargon. And today we're diving into Provident Financial Holdings Incorporated's latest proxy statement. Get ready because we're about to uncover what really goes on behind the scenes of this financial institution. And trust me, there are some interesting numbers in here.
You won't want to miss this. Remember to check out our Discord community. The link is in the description below if you want to keep the conversation going.
Provident Financial Holdings is getting ready for its annual meeting of shareholders. This meeting is where important decisions are made, like electing new board members and approving executive pay. Everything officially kicks off on Thursday, the 20th of November 2025, at 11 a.m., but here is the twist. It is not a typical in-person gathering.
This year it is happening all online, a virtual meeting. So, no need to dress up. Just log in to participate.
The main events at this meeting are Proposals 1, 2, and 3. First up, they'll be voting to elect 3 new directors to the board. These directors will serve for a good chunk of time, 3 years, to be exact. Think of them as the captains steering the ship for the next few years.
Then we have Proposal 2, which is all about executive pay. This is where shareholders get a say, an advisory vote on how much the top executives are being paid. It's like the shareholders giving a thumbs up or thumbs down on the compensation packages.
And finally, Proposal 3. This is about voting to approve who will be the company's independent auditors for the upcoming fiscal year. In this case, it is Deloitte and Touch LLP. They're the ones who check the company's financial books to make sure everything is on the up and up.
Now, who gets to vote on all this? Well, it all comes down to who owns shares by a specific date. The company has set the 6th of October 2025 as the record date. So, if you were a shareholder on that day, you have a right to cast your vote.
As of that record date, there were over 6.5 million shares of Provident stock out there that were eligible to vote. That is a lot of voting power.
When we look at who owns the most stock, a few big players stand out. The Provident Savings Bank Employees Stock Ownership Plan Trust is a major shareholder, holding over 10% of the company's stock. Then, you have Dimensional Fund Advisors, LP, M3 Funds, LLC, and Raffles Associates, LP, each with significant stakes.
It is good to know who the big players are because they often have a big influence on the company's direction.
It is interesting to see the Employee Stock Ownership Plan Trust is such a large holder. This plan is for the employees, so it shows a good alignment between the company's leadership and its workforce. They own more than 697,000 shares, which is about 10.72% of the company's stock.
Dimensional Fund Advisors is another big name, holding close to 500,000 shares, or 7.66% of the company. They're known for their systematic investment strategies, so their presence suggests a belief in the company's long-term value. Then we have M3 Funds, LLC, holding over 436,000 shares, representing 6.70%. They are a bit more diverse in their holdings, but still a notable investor here. And finally, Raffles Associates LP, with over 393,000 shares, or 6.05%. These are the major institutional investors that will likely be keenly watching the outcomes of the shareholder meeting.
Now, let's talk about the folks running the show, the directors and executive officers. Looking at their ownership, we see a mix. Some hold a decent number of shares, like Donovan P. Turns, the president and chief executive officer, who owns over 222,000 shares, and Craig G. Blunden, the chairman,
with over 240,000 shares. When you add up all the shares owned by the executive officers and directors as a group, they collectively own about 757,000 shares, which is 11.49% of the company. This shows a pretty good level of insider ownership, which can be a positive sign as it suggests their interests are aligned with those of other shareholders.
Moving on to Proposal 1, the election of directors. The board is proposing 3 individuals for election: Debbie H. Guthrie, Kathy M. Makalak, and Matthew E. Webb. They are being nominated for 3-year terms. The company highlights their specific experiences. For example, Debbie H.
Guthrie has extensive experience in real estate and business management. Kathy M. Makalak brings a background in nonprofit leadership and community engagement. Matthew E. Webb, a civil engineer by trade, is involved with urban planning and development in the region. These individuals are meant to bring diverse perspectives to the board.
Take Debbie H. Guthrie, for example. She has a long history of managing family real estate holdings and previously held a significant role at Raincross Hospitality Corporation. Her deep knowledge of financial needs in the markets they serve is of particular value.
Then there is Kathy M. Membelak. Her work with Habitat for Humanity Riverside gives her insight into affordable housing and strong community connections. She has also been active with the Greater Riverside Chambers of Commerce.
And Matthew E. Webb, a civil engineer and CEO of Albert A. Webb Associates, brings expertise in infrastructure development and community advocacy. His involvement with numerous boards like Riverside Community Hospital and the Greater Riverside Chambers of Commerce also adds significant value.
These nominees are clearly chosen for their specific expertise and local community ties.
The current directors continuing in office include familiar faces. Craig G. Blunden, the chairman of the board, has been with the company for a very long time, since 1975 in various roles. His banking experience is extensive, and he chairs the Long-Range Planning Committee.
William E. Thomas, who serves as lead director, is also the chair of the Personnel and Compensation Committee. His background as an attorney brings valuable insights into corporate governance and regulatory matters.
The board of directors and its committees are quite active. The Provident board and the bank board both held 11 meetings during the last fiscal year. It seems like they are staying on top of things. They have dedicated committees for audit, nominating and corporate governance, and personnel and compensation.
These committees are crucial for overseeing different aspects of the company's operations and strategies.
The audit committee is particularly important. They're responsible for making sure the company's financial reporting is accurate and that internal controls are strong. They even have to meet with the independent auditors to discuss the audit results. And for Provident, the audit committee members are considered independent,
which is a good thing for ensuring objective oversight. Judia Carpenter, Kathy M. Mekalak, and Matthew E. Webb are on this committee. Ms. Carpenter is noted as an audit committee financial expert.
The Nominating and Corporate Governance Committee is in charge of finding and recommending new directors. They look for nominees with a broad range of skills and experiences, considering not just their professional background, but also things like diversity of viewpoint and background to ensure a well-rounded board. They really emphasize having a diverse board to bring different perspectives to the table.
And then there is the Personnel and Compensation Committee. Their job is to set the compensation policies for the whole company, including for the top executives. They evaluate the CEO's performance and approve compensation levels. This committee is made up of William E. Thomas, Debbie H. Guthrie,
and Brian N. Hawley.
It is also worth noting that the roles of chairman of the board and chief executive officer are separated. Craig G. Blunden is the chairman, and Donovan P. Turns is the president and chief executive officer. This separation can lead to a more balanced approach in leadership,
with the CEO focusing on daily operations and the chairman guiding the board. They also have a lead independent director, William E. Thomas, who acts as a key liaison for independent directors and helps ensure that their concerns are heard.
Regarding director independence, the company states that 6 out of their 7 directors are considered independent according to NASDAQ rules. Only Craig Blunden, the chairman, is not independent. Having a majority of independent directors is generally seen as a positive for good corporate governance,
as it suggests that the board is not overly influenced by management.
Let's dive into the numbers, specifically executive compensation. For the year ended the 30th of June 2025, the company has set up an annual incentive plan. This plan is tied to performance goals like net income, return on assets, and earnings per share. The target bonus could be up to 50% of his salary. For other senior officers like David S. Wyant and Gwendolyn L. Wirtz, the target is up to 25% of their salary.
Looking at the actual performance for fiscal year 2025, the net income came in at $6.255 million. This was below the target of $10.395 million, and even below the threshold of $8.316 million. This is a really critical number. It means that while they had a bonus structure in place, the actual company performance in terms of net income did not meet the minimum required to trigger any significant payouts under this annual bonus plan. The return on average assets for 2025 was 0.50%, falling short of the target of 0.82% and the threshold of 0.65%. Again, this is below expectations.
and diluted earnings per share was $0.93. below the target of $1.54 and the threshold of $1.23. These numbers clearly show that financially, the company did not hit its targets for the fiscal year, which would likely mean a lack of bonuses for the named executive officers based on this annual incentive plan.
The company states that net income is the overriding consideration. And since they missed that, it is unlikely any bonuses were paid out under this plan.
Now, let's look at the total compensation for the named executive officers for the fiscal year 2025. Donovan P. Turns, the CEO, has a total compensation of $732,537. David S. Wyant, Senior Vice President and Chief Lending Officer, has a total of $332,218.
And Gwendolyn L. Wirtz, Senior Vice President of Retail Banking, has a total of $282,673. It's important to note that the compensation figures from earlier in the report show that for 2025, none of these executives received any non-equity incentive plan compensation.
Given the missed performance targets discussed earlier, this makes perfect sense.
Donovan P. Turns has an employment agreement with the bank, effective the 2nd of January, 2024. It has a 3-year term and can be renewed. His base salary is set at $525,000, subject to annual review. He is also eligible for performance bonuses, benefits, and a monthly car allowance.
This agreement also outlines what happens in case of disability, death, termination, or a change in control, which we'll touch on later.
In terms of potential payouts upon a change in control, which is when a different company might acquire Provident Financial Holdings, Donovan P. Turns could potentially receive over $1.9 million for David S. Wyant and Gwendolyn L. Wirtz. This amount is around $630,000 each.
These figures are quite significant and are meant to protect these executives in the event of a company takeover. However, they also mention that these payments could be reduced to avoid triggering excise taxes.
Now we come to Proposal 2, the advisory vote on executive compensation, or as it is commonly called, the say-on-pay vote. This is your chance as a shareholder to voice your opinion on whether you approve of how the executives are being paid.
The resolution basically asks shareholders to approve the compensation disclosed in this proxy statement.
The board of directors is recommending that you vote for this proposal. They argue that competitive compensation is necessary to attract and keep top talent, that the program balances short-term and long-term interests, doesn't encourage excessive risk, and that compensation is tied to measurable goals and company performance.
It is worth noting that in past years, this company has seen lower approval percentages on their say-on-pay votes, which is why they've been actively engaging with shareholders on this topic. They've been trying to address concerns and ensure alignment.
Let's switch gears to the Audit Committee report. This committee has reviewed the company's financial statements for the year, ended the 30th of June, 2025, with management. They've also discussed their findings with Deloitte and Touch LLP, their independent auditor. Based on all this,
They've recommended to the board that Provident's audited financial statements be included in their annual report. This is a standard but important step to assure shareholders of the accuracy of the company's financial reporting.
and that brings us to Proposal 3, the ratification of the appointment of Deloitte and Touch LLP as the independent registered public accounting firm. The Audit Committee selects this firm, and it is up to the shareholders to approve it.
This is crucial for maintaining the integrity of the company's financial reporting.
Looking at the fees paid to Deloitte and Touch LLP for the year ended the 30th of June, 2025, the company paid them $721,759 in audit fees. That includes the annual audit, quarterly reviews, and the audit of internal controls.
They also paid $82,170 for tax fees and around $1,895 for audit-related services. The tax fees, mainly for preparing income tax returns, were $82,170 for 2025. That is a pretty standard expense for a company of this size.
Now, let's look at how everything connects. The report includes a pay versus performance section. This is designed to show how executive compensation aligns with the company's financial performance. For the fiscal year 2025, the total shareholder return, assuming a $100 investment in 2022, was $118.05. This means that over those 3 years,
The investment grew by about 18%, which is a decent, though not spectacular return.
However, remember that net income for 2025 was $6.255 million,
which, as we saw earlier, was below the targets for bonus payouts. This creates a bit of a disconnect. Shareholders saw a modest return on their investment, but the company's net income performance was a miss, impacting executive bonuses. So, what is the big picture here for Provident Financial Holdings? On one hand, they seem to have a solid corporate governance structure with independent directors and active committees. The company also highlights its commitment to engaging with shareholders and transparency. The insider ownership is also a positive signal. However, the financial performance in fiscal year 2025, particularly net income, was a miss compared to their internal targets, which directly impacted the executive bonuses under the annual incentive plan. While the total shareholder return showed some growth, the lack of hitting net income targets raises questions about the effectiveness of the strategies in place to drive profitability.
The advisory vote on executive compensation, or say, on pay, will be a key indicator of how shareholders feel about the compensation structure when financial targets aren't met. The company acknowledges past lower approval rates and their efforts to address this.
Provident Financial Holdings appears to be a well-governed institution with shareholders and leadership who are actively involved. However, the recent performance figures, especially concerning net income, suggest that adjustments or renewed focus on profitability might be needed to truly align with shareholder expectations and ensure the most effective use of their compensation strategies. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps.
And subscribe for more deep dives. We also have a Discord community linked in the description below, so come join the conversation there. Thanks for watching. See you next time.